Hi everyone. So this is part two of the first video titled "Find Me a Competitive Interest Rate." You are in for a treat. So on that first video, very quickly, we looked at this screen and we said we inputted this data point, we did the whole qualification, and now let's show you what the interest rate is, right? Look, interest rate is always subject to change. The mortgage market is very dynamic. Once I click on this, and I come back 10 minutes, that pricing, that interest rate will potentially change. Okay, so just keep that in mind. But this is for educational purpose only. My entire goal is to have you ask smart questions, avoid costly mistakes, and save thousands of dollars. Look, what I'm doing is, as I mentioned in the first video, it doesn't matter if your Uncle Bob is the CEO of the largest bank in the world, your aunt closed millions of dollars loans. This is the basics. You have to do this in order to come up with the most optimal terms and conditions in the marketplace for you, the consumer. This is what I do, right? So what this engine does is behind the scenes, I'll click the search. It's running all these different permutations and it's saying, hey, let's run this. Let's find the best possible outcomes. This is why you come to a mortgage broker. Otherwise, you'll go to a captive company, a bank that's captive that only sell their product, come in here and give you some basics, okay, what you're about to see. So the interest rate probably has populated all that stuff. So before we get to that place, right? So this video is for educational purpose only. Interest rate and fees are always subject to change. A quick disclaimer. What I've done is I've just created a bunch of lender names here, and I kept the interest rate constant because I want you to understand these concepts. There's points, there's par, there's lender credit. What does this mean? So very, very quickly. Points cost. My industry always tries to make this very complicated. And all this means is, hey, I have to pay you, the consumer, right? Not me. The consumer, the borrower, has to pay to get something. So in this case, you're paying $500 to get an interest rate of 6%. Okay? I come back to bar pricing. Lender credit is I don't have to pay for something. I can actually use this money, this lender credit, to reduce, offset my closing costs. So basically, the lender is giving you some money, right, on that particular time and date. Interest rate is constant here, okay? But yet you can see, and you should ask yourself now, how come the data here changes? So you call me. Let's do a quick scenario. You call me and you get referred to me by your ad, and you said, hey, Imran, I need you to quote me interest rate based on my scenario. We've done all this work. And I said, hey, you know what I can do for you, Mr. and Mrs. Burrow? I can actually give you 6% at $1,350 cost in points. So you have to actually go into your checking account, find that money, and pay to get that interest rate. You should start wondering, well, why? I can go to lender E at 6%, and that lender actually gives me money, $1,100 in this scenario, to offset my closing cost. Okay. Ladies and gentlemen, this happens every single day. People are getting bamboozled and taken advantage of. And my job is to educate you so that you don't make these costly mistakes and then you can actually go share with other people. So let's just seeing here you are seeing the output of what we just all inputted, right? This is the pricing engine. 50 plus lenders, we shop for you. Easiest way to do this is you reach out to me. It's like, Imran, I need to buy a home or refinance. Can you find me a good interest rate? So I'll do this in person with you. Unfortunately, I am blurring some of these fields just because, look, I don't want to, we're living in a litigious society. I don't want to get sued. But if you call me, I'm not going to blur any of this. You're going to get to see all the data points, okay? Full radical transparency. So rate changes and the pricing associated with it at least 3 times a day, okay? Um, this is the interest rate column. The lender column you don't get to see, unfortunately. Pricing, this is what I just educated you on, right? Uh, red is not necessarily bad, but this is points, right? Sometimes it makes sense to pay points to get a lower interest rate. All depends on the break-even analysis, right? How long you're going to stay, with the purpose of you buying this home, etc. Or you get a nice lender credit of about $1,300 roughly for a tiny bit higher interest rate, a little bit of payment difference of, I shouldn't say that because still $30, $32 is that's per month. That's a lot of savings if you just pay a tiny bit of points. Okay, so now that you know that, let me show you what's happening today. So first of all, There's a lender list, tons of lenders, tons and tons and tons, right? And let's say you call me and said, "Hey, Imran, I was just referred to you by my uncle, and he said you do a great job." And I said, "Yep." And I take all this data from you, and I said, "You know what? What I can do is I can get you 6.49, but listen, it's going to cost you $576. Okay? It's going to cost you $576 at 6.49. Hmm. And you said, all right, well, my uncle trusts me. I trust you. So I'm just going to go with it. Ladies and gentlemen, look, the stats is 90% plus of the consumers, they don't shop. And unfortunately, my industry knows that. So they take full advantage of it, right? They know you don't shop. Um, and look, you just got bamboozled, right? Maybe someone else actually tells you. What if I just said, hey, to entice you, I can do 6.5. And you know what? I have a special. I don't have it. It's the lender credit, right? But I can get you $1,800 in credit. That might wow you, right? And stop you from asking me to see this screen. Look, you gotta hold these people accountable. Like me, just keep going. So I place you in a 6.49 at $576, but let's just go back. Wait a minute. 5.625 was at a small cost. Heck, 5.875 is at a credit of $1,376. That's a payment of 2,300 monthly payment of 2,366. Had I just put you on a 6.49, 6.49 was what? 2526 we're looking at minus, yeah, by the way, this is monthly minus, we said, let's just use, what did we say? Yeah, 2,366. That's $160. Let's say you stay there for 60 months. That's $9,600, right? $9,600. You can do that math for another scenario, right? Say you call me and said, "Hey, Imran, I need a little bit more credit. I don't really, the interest rate is not important to me because I actually want to save some money in the bank, right? I don't want to use all of my funds because anything can happen when you buy a house, right? Those of you who bought homes, by the way, we all know that something, maybe not the first year, the second year, something breaks. It is what it is. So knowing that, he said, "Hey, I want to keep $2,000. Can you just put me at an interest rate of a little bit higher, but I want to at least get offset my closing costs by 2,000. Sure. In this case, look, I'm being very super transparent. 5.99 gives you about a $2,000 credit. Great. Let's lock the deal, making you smarter. And please take this opportunity to share this video with others so we can actually save them from being taken advantage of. They can get educated in this whole process. They can ask smart questions, avoid making costly mistakes, and save thousands of dollars. Have a great day. Thank you.